Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is July 14 and we're starting from euro-dollar pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.1178 on Thursday afternoon, coinciding with the rise of the MACD line from zero and the latest US inflation data, prompted a buy signal that led to a price increase of over 50 pips. No other market signal appeared for the rest of the day. The economic forecasts of the European Commission and the Monetary Policy Meeting report of the ECB boosted euro in the morning, while the reduction in the price pressure from US manufacturers hit dollar in the afternoon, extending the rise in euro-dollar pair. Today, a number of important reports lie ahead, namely Germany's wholesale price index, Italy's trade balance, and the Eurozone's external trade balance. There will be also a meeting of the finance ministers of EU countries, but they may not continue the rally in euro, giving sellers an opportunity to seize the market. For long positions, buy euro when the quote reached 1.1237 and take profit at the price of 1.1296. Strong statistics from the Eurozone will help the pair grow. However, traders should make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.1191. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.1237 and 1.1296. For short positions, sell euro when the quote reached 1.1191 and take profit at the price of 1.1133. Pressure will increase in the absence of bullish activity at the yearly highs. However, when selling, traders should make sure that the MACD line is below zero or is starting to move down from it. Euro can also be sold after two consecutive price tests of 1.1237, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.1191 and 1.1133. The next stage of our review is the next major, GBP USD, this trading plan presented by Sebastian Seliger. The GBP USD pair has made a new swing high at the level of 1.3141 at the time of writing the analysis, and bulls keeps pushing higher. The next target for bulls is seen at the level of 1.3163, which is the key long-term technical resistance on the weekly timeframe chart. The old swing high will now act as a key short-term technical support located at the level of 1.2848. The momentum is strong and positive. However, the extremely overbought market conditions were hit on the H4 daily and weekly timeframe charts. So a pullback towards the support is on the table. Only a sustained breakout below the moving average, dynamic support around 1.2693 would change the outlook to more negative. And finally, here's Laurie Bailey with USD JPY pair focused. Let's have a look. In our last review of the yen, which was on July 12th, we talked about the descending wedge pattern of the modern oscillator on H4 timeframe chart being a sign of a reversal of the oscillator and the price moving upside. But only the oscillator broke out, and sharply at that, while the price fell, conducting a short consolidation below the level of 138.78 and extending its downward movement this morning. Perhaps the decline will be the final step in forming convergence, and then correction may occur. The nearest corrective level is 138.78. It will correspond on 23 according to Fibonacci, seen daily chart. Going above it will extend growth to 140.35, 38% of correction. Overcoming 140.35 will open the way to attack 142.30 and the MACD line on the daily chart, blue line on graphic, 61% Fibonacci retracement. However, the correction plan is still weak on the daily chart. The target is open at 135.55. We're waiting for clarification of the situation. Gold, sweet gold. We got a trading plan for this commodity asset presented by Wealth Shelter. The price of gold climbed as much as 1963 today, registering a new high. Still, the price action signaled exhausted buyers in the short term, so temporary retreats or sideways movements are natural. It's trading at 1960 at the time of writing. Fundamentally, gold stays higher as the US reported mixed data yesterday. The PPI rose by 0.1% less versus the 0.2% growth expected, while core PPI reported a 0.1% growth versus the 0.2% growth forecasted. Furthermore, the unemployment claims came in at 237k versus 251k estimates. Today, the US prelim UMA consumer sentiment represents a high impact event as expected of 65.5 points versus 64.4 points in the previous reporting period. Better than expected data could force XAU USD to drop. As you can see on the H1 chart, gold extended growth after retesting the 1935-1931 broken resistance area. Now, it has stabilized above the weekly R2 1953 level and is fighting hard to reach the upper median line. Technically, the 1967 former high represents an upside target and resistance. False breakouts through this resistance may announce a potential sell-off. Dropping and closer under 1953 activates a larger drop towards the median line. A valid breakout above 1967 and through the upper median line activates further growth. This is seen as a new buying opportunity. That's all for today. See you online soon. Good luck.